Damn! Here we go again. Catering to a bunch of idiots who want to learn a get-rich-now scheme. So here is an average Joe. Day trader. Elite. Looking excited while clicking buy on a bunch of options. The derivative market is a beast, a sophisticated, layered beast. And retail traders? They think they can tame it with strategies like buy low, sell high, or by picking the perfect call or put option. But there's a catch. Options are like ticking time bombs. And who's holding the bomb? Our fearless retail trader. When they buy an option, they're essentially betting against the very laws of probability and time. The truth is, options decay, and that ticking clock is not your friend. Here's the kicker. Institutions and hedge funds know the game. They're on the other side of those retail trades. You see, smart money is often selling options, not buying them. Why? Because when you sell options, time is on your side. Every second that passes, you win. Retail traders, bless their optimistic hearts, willingly sign up to play a rigged game. Buying options seems like a small, tempting price to pay for a big reward. But the house always wins. And buy house. We mean the sellers who pocket the premium, whether you win or lose. So, what's the smart play? Sell options, don't buy them. Be the casino, not the gambler. Selling gives you an edge, as long as you know what you're doing, of course. But the real absurdity, most retail traders never learn this and keep buying into the dream while the smart money quietly collects the premiums. So, the next time you're tempted to buy that lottery ticket option, ask yourself, do you want to play the sucker or do you want to win like the pros? The derivative market is absurd, but only if you don't know the rules. Play smart, sell options, and stop giving away your money. Stay smart, stay profitable. Subscribe for more eye-opening trading insights.